This is the S&P 500 one-day reading for March 28th, 2023. It's currently February 3rd, 2023, 10:40 p.m. Eastern Time. The overall theme and behavior for the day, we have a key a key support level that offers an opportunity to cash in on a position. So there's some good money that could be made today. It looks like behavior around the highest high. There's a decline from the high down to and through a support to meet another support. We bounce around that support for a bit, and then we break down through multiple supports. Behavior around the lowest low, there's a decline through multiple support levels to reach the lowest low. So this is definitively bearish in that regard. However, what's interesting is that we have highs at the end of the day. And when I was talking about, when I was predicting the 27th, I think I probably scrolled right past this unicursal. I didn't even notice it, and pointed out that there was one on the 29th. So we have a unicursal here on the 27th, a unicursal here on the 28th, and a unicursal here on the 29th. A unicursal here on the 30th. Oh my God, guys! There's some real. It's either one big drop, or like, several like drops from the same price level. Possibly, we'll have to look at it, but definitely want to be like leaning towards the bearish side when we see unicursals. I'm advised to trade around a notable move to the upside standing out on a one-day chart out of oversold territory or to fill a previous gap down. There's also a correlation there to the Prince of Cups. So it'll happen out of a decline. You can see there's like a notable decline here, or correlation to the Prince of Cups all throughout the end of the day. And then there's a unicursal there. I'm advised not to chase a rally. Looks like we have a high at the end of the day, followed by a sharp decline after we break through a key resistance level near the high just momentarily. There's a sharp decline off of the high. Also looks like there's decline. We in the pre-market we likely open lower, and then there's a notable decline into the open. At the open, we have a trade opportunity to open up protection. There's a move to the upside through a resistance level, followed briefly thereafter by a breakdown, a full retracement of that move higher, a full retracement back down to where that move higher started through the resistance. So it creates like a capital A in the English language, with the resistance being the horizontal line. That kind of chart pattern, and then out of that retracement there may be another bit of a move to the upside, but that rally is halted by a breakdown through key resistance on the scale of a one day. We come up against an important range. Between 11 and 12-ish. It's a range that'll stand out on a more than just a one-day chart. It looks like there's a crest at about 11:45. Then we have some notable price swings with a big move to the upside towards around like the 12:45-ish time. We have a prominent crest and a failed attempt to break through key resistance. It'll be resistance that we've broken through, or that we tested once before recently, likely probably here at the beginning of the day. And we declined through key support, falsely established support probably that we had here. But in any case, decline increasing with momentum as we move forward into the last few hours of the day. There's a trade opportunity between 2 and 3. At a support. Interesting. There is a rally, so there's a rally around 3 o'clock off of support along a diagonal trend line, breaking through horizontal resistance, meeting second resistance, and then pulling back to somewhere between those two price levels. Advised not to chase that rally into the end of the day, and then there's a decline or sharp drop off of that rally. That drop actually offers an opportunity to open up a long position, but there's a sharp drop there. It's important to point to, like, there could be like a day trade made here. If you close out of this short position open at the beginning of the day, if you can close out everything here at the end of the day in the midst of this decline, rather than opening up a long position per se. The opposite would be to close a short position, which I think in the midst of this decline is probably what is more appropriate. Right here towards the end of the day. Interesting. It's a 20. Yeah, and there's a key technical price level. Especially, it looks to be highlighted towards the end of the day, especially. It'll be important on more than just a one-day chart. It'll be important on like a larger time frame kind of scale. And then behavior, or the sneak preview card. Sneak preview card for the following day. We open higher, but there's selling from near overbought crest or peak, it appears. That's the S&P 500 for March 28th, 2023. Let me know what you think by hitting that like button. Don't forget to subscribe. Most importantly, my friends, make sure that you follow the rule of karma. If you don't know what the rule of karma is, it's important if you plan to profit from this information that you understand the rule of karma, because you don't want to inadvertently end up like shutting off the flow of abundance that you could get from following the rule of karma with this channel. The whole purpose of this information going out free is to be utilized for goodwill, right? So 5% of the profits, it's not a lot. Pay it forward to the universe. Somebody that needs it doesn't see it coming. 5% back to the channel. We deserve it. And then 90%, as long as you spend it out of love, the universe is going to allow you to continue profiting from this information, and they're going to send it back to you tenfold in all directions, my friends. I'll see you on the next one.